Our morning must read is about something crowding out a discussion of the American labor economy, and that's Puerto Rico. Matt Levine, the giant over at Bloomberg View, writing up a piercing note. Puerto Rico obviously has borrowed too much money, which necessarily means that people have been lending it too much money. Back in February, Christy Culpepper, Ace Kentucky fiscal expert, wrote that hedge funds will continue to stuff Puerto Rico like a giant debt pinata until a shift in capital flows busts it open. Carl Riccadonna with us with Bloomberg Economics and Lachman Achithon with ECRI. Carl, to you first. I think this is an important point. There's got to be somebody on the other side of the transaction. Somebody's got to be dumb enough to buy Greek debt and take it on board. Somebody's got to be dumb enough to buy Puerto Rico debt and take it on board.
Absolutely. And if you look at the economic fundamentals in either case, whether it's Greece or Puerto Rico, the economies are mired in recession. The Puerto Rican economy has been struggling terribly. They can't pay their bills if they're not growing.
Lachman, the yield hogs, they had a free lunch. Yields don't go higher. That's when prices go down. So they can sort of be confident right now. Is that part of the reason Puerto Rico got into trouble?
Well, I mean, as you were saying, there's two sides to the trade. There's also the lenders. And here, I think there's a lot of strange things that have happened with easy money and high liquidity and search for yield. And we may be seeing aspects of that popping up here. And as you say, when you're in a recession, it's very tough to service your debt. Luckily, a lot of the world isn't in recession. So that's helping things off for the time being, and I think keeping us away from that.
Well, there's a story.